How is everyone doing today? I hope everyone is having a good day. It's indeed a rainy day here in Sydney, unfortunately, but I'd like to say that whenever there is a rainy day, the market is falling, and that's exactly what is happening at the moment. But when we look to a little bit of a bigger scope, there's markets up, there's markets down, so it just depends what you trade. It just depends risk tolerance and etc. So lots of things are happening to the market. I want to try to cover a few things, at least 50 to 60% of what is going on at the moment. But pretty much, yields have been raising, so market is shifting to risk off at the moment. And we're going to be looking afterwards at the 10-year yields, the 2-year yields, both of them are rising, flirting with the 5%. So very interesting times. Also, is it still a good time to long gold? Well, that's what we're going to be looking today, because gold is skyrocketing again. We saw gold reaching $3,300 just today or yesterday, just depends where your time zone is, but most likely today gold is trading at $3,333. It's already an $18 move up for the day, so 55.55%, so half a percentage, a full percent. We have US dollar, Japanese yen falling as well, so as they say, the safe haven currencies back in play. So Japanese yen, CHF, Canadian dollar, and a few other currencies are back into play. So we're going to be looking at those as well. Why did the US dollar weakness so much in the last couple of days? We saw US dollar index raising above the 100 and then had a big push up all the way down from 97, if I'm not wrong, 97,500, all the way up to 101, 102. So that's pretty much a 4% move. And now in just a couple of days is, giving all back. So since the top to today's, it's down 2.46%. So definitely there's something going on there, and I want to explain for everyone what's happening. Of course, US dollar index down, euro dollar up. So so we're going to be looking at a few of those trades today. Last but not least, I don't know if you guys knew, but we had the G7 meeting at Atlanta yesterday on US. And that did spark some sort of a volatility into the market. So trade tensions are back after the G7 meeting, and that's what I want to discuss with everyone. If I'm not wrong, is Atlanta, okay? Sorry if I did that wrong, but let me just check again. I'm most likely sure that was in Atlanta. Sorry, it was Alberta, not Atlanta. So let me just get this... Let me just get this correct. It was into Alberta. All right, let's get started. So let me take this off. Okay. Cool. So first thing is, still gold is still good. It's still a good time to long gold. Well, if we look at gold at the moment, no sound. Yeah, sorry. It's because I have to leave it there for you guys to read it, and I can't say anything. It's just the legislation. So I'm gonna, I have to mute myself. Okay. Okay. Gold has been a very, very interesting one. So I even did a evergreen. I've done a content into that a couple weeks ago, if I'm not wrong, maybe 2 weeks ago. For those who don't know, if you are new to trading, you can come to acy.com website, go into learn and then education, and then you can click on Luca or Ashley or Jasper, and you can have a look at all the content we've been doing. So for instance, my last one was last week on when to trade gold time zones, risk sentiment and strategy. So this is a really great, startup point. So you can come here, have a read it, and if you have any questions, you can come back to me later on the webinars and ask me the questions. So same goes for how China's strategic reserve and Basel III are reshaping gold, geopolitical gold, how conflicts in 2025 impact gold, and etc. So coming back to here, there's always opportunities into gold, and that's why I like to trade gold. So for instance, right at the beginning of this week, we were trading at 3,100, 3,200 and well, let's say 3,200, around 3,200, $3,250. Okay. And just after that, the market has a spike already, pretty much 4%. If we counter this high here. So yes, it's always still a good option to be trading gold. I was doing a blog today, and I was like, interesting. What about if I look into like just a line chart into the monthly time frame? Well, people that bought gold like here in 2017, they're pretty happy at the moment, or even in 2023. It's crazy to look back and think, whoa, what just happened? Where were I? And those are the types of trades we ended up missing, unfortunately. So if you look here, gold has been, in 2023 trading at 1,827 and pretty much double the price at the moment. So 1,827 times 2. So it's pretty much double the price since like a year and a half, most likely. Pretty much 1 year and a half, 2 years maximum. So yeah, lots and lots of things have been happening. And the major major switch into gold, it's only one. It's the risk, okay? Gold is being using for ages already, as we can see here, like for ages and ages and ages, since the $0 $0 was like somewhere here into 1950s, 1960s. Is it my sound is good, guys? Can you hear me well? Because we just got some comments saying that my sound is not good. Please, someone can just tell me. Perfect. Okay. Can hear you just fine. Yeah. Okay. Thank you. So Bruce, maybe he's on your end. Maybe if you turn off and turn on, or maybe go out and come back, it can probably help you. Okay, because everyone else is saying it's okay. Maybe using a headphone. So just look at the plugin. Maybe. Okay. Cool. So as I was saying, if we look back into gold, man, come on, look at that. How much pips could we make on just with a 001 lot? We could be rich at the moment. But anyways, so gold, in my opinion, I don't like to trade short on gold. I expect the pullbacks, but I don't like to trade short into gold. And the reason is, look at back. Just look at back. Look at your mirror and look at the back. It doesn't even go down. This is like a free money glitch sort of thing. Yes, of course, it's not always you're going to make money on gold. You will lose some money as well. But if your winnings are bigger than your losses, then you are profitable into that aspect. Okay. So just coming back into the daily here. If we had that whole move already since 2024, this is 2025. The white line here is 2025. So since 2025, we are up already pretty much 25%, if I'm not wrong, 27. Yeah, 25%. So if you want to count all the way to the top, is more than pretty much 30%. Okay. So yeah, I completely believe that most likely what can happen is gold go above the 3,500 mark. Okay. 3,600 is my target quite a while already. For those who have been following me know that. 3,600 have been my target for quite a while now. It's just a matter of where should I enter, okay? Because if we look here, it's not far away. It's literally not far away. And just go back into the, oops, sorry, go back into the candles. So if we look, there's ways and ways for you to be looking at that. But what I like to do and what I've noticed it is that the price uses the last high of the last, wave as a support. And it's pretty insane how that works. And you can see here again, like this one, worked well, like this one worked sort of well. So, I like to use those types of support and resistance. And that's pretty much what I use in terms of technical. So now is the best time, to be honest. The best time was here, but now is the best time if we have a sort of a pullback into gold. Let me go for 50 minutes. If we have a sort of a pullback into gold somewhere around those areas, I guess it would be a good time to be looking to long gold. Yes. So I still believe that gold can continue to go to $3,600. Okay. There's other institutions talking about even bigger, okay, even bigger moves like 4,000, 4,200 and etc. So yes, the risk is off from the market, and gold has always been a good hedge for that type of thing. Because whenever there is inflation, there is risk. Okay, majority of the time, central banks are trying to control inflation with one and another way. Okay, and it hasn't been different the last couple of years. In fact, we had the Federal Reserve, the RBA, all of those other central banks saying that, there's a lot of uncertainty around the market at the moment. And what happened is they go and buy gold. The central banks go and buy gold. Okay, that's what they do. And that's most likely what they will continue to do. Because if the central bank is buying gold, continually buying gold, why shouldn't we look to buy gold? Right? So there's always that sort of talks about gold. Yes, it's risky, very risky. Okay. There's a lot of risks into gold, especially if it goes against you and you're not on the proper risk management sort of way. It will get you. Okay. Because it's pretty quick. Moves happen pretty fast and pretty quick for both ways. But if we look back again, as I say, if we go like for a monthly time frame and then just change it for candles for line, we can see that it has already been a good hedge. It always goes up. Okay, in 2011 all the way down to 2015, also we had 4 years of price discount. Okay, so pretty much gold was trading close to $2,000 and then went back all the way to 2,000. So that's a 50% retracement. Okay, so that's 50% cheaper for you to buy. So that's the way I like to look gold. So yes, I continue to believe gold is a strong opportunity into the market. Okay, it's just a matter of capturing the right moment at the right time. Okay. Yeah, so lots of people, can see like, oh, there's a trend line here. There's what else is this one here? I forgot the name. The head and shoulders pattern. Yeah, you can, there's lots and lots of ways for you to be able to trade, but just stick to the simple. Like, yeah, cool. Risk is on, so I won't be looking to long gold. I will be looking to short gold. Risk is off. I will be looking to long gold. I won't be looking to short gold. Okay, so that's simple as it is. Okay, cool. Any questions on gold? Can we go ahead? I think it's pretty clear. So yes, I still believe gold can continue to rally. Most likely around 3,600. Okay, because if we break these highs, if we break those highs, it's pretty quick to that happen, and it's a 15-minute time frame. So go for 4 hour. So it's pretty quick for this little move here happen. Okay. But if your strategy stays short and you have a good strategy, then yeah, go for it. It's your choice. I'm just here giving you the cards. Okay, cool. Right. The next one is why US dollar is weakening so much in the last days. Well, if you haven't noticed, DXY, where it is, this one. So if you haven't noticed, DXY have been quite bearish since the beginning of this year. Okay, like here. Okay. So since the beginning of the 2025, we've been down already somewhere around 8 to 10%. Okay, into the XY. For those who don't know, it's always a good opportunity to be looking to trade euro dollar when DXY is it's bearish like that. Cool. So yeah, that's the first thing. All right. So lots of strong moves going down, and lots of things happening for that to be where it is at the moment. I'm not saying that it happened from a day to another, but it's an account of a lot and lot of events happening. Weaker economy, a lot of fear into the market, so the market don't want to hold the risk into hands, so you offset into safe havens, or it offset into fixed income, and it goes like that. So lots and lots of things happening. But for mainly, what has been driving the US dollar down at the last couple of days is yields, okay? And it actually is it's my title, yields are rising, market shifts to risk off. So that's exactly what I reckon is the whole point at the moment. And it has been a good option to be looking into euro, okay? But anyway, so if we just go into, you know what? Let me do something even better. Let's US 10-year yields. Okay, cool. And let me change this one to line. So on yellow we have the DXY, and on pink we have the US 10-year yields. Okay, so can you see that every time we have a big spike into the yields, so we have a big spike up, okay, big spike up, market goes down. So here it went down, the market went up, okay? And then now it's close to the 5%. So 5% is just here, it's very close. What is happening with that? Market is going down, okay? So yields are I would say a thermometer for what could happen into DXY, for instance, or what could happen into US economy, or what could happen into the debt. For those who don't know, the best way to measure debt is the GDP. Okay, so the GDP is the gross domestic product, how much that country produce in a year, in a quarter, or in a month. It's a public information. I'm not saying this is this is something out of hand. Okay, so if we have the GDP that is I don't know, 1 trillion, and the debt is 2 trillion, how will that country pay the debt? Okay, because the debt is much more expensive than what he gets paid, let's say. Okay, so the debt for US right now is 120% the GDP. So that means it is 1.2 times bigger than the GDP. So it's pretty simple. So we get GDP for USA. It's 27.72 trillion, okay? So if we get 27, let's say just 27 trillion, let's put in 28. So 28 trillion, okay? So 1,000, couple thousand, 100,000, million, billion, million, million, billion, trillion, okay? So 28 trillions times 1.2. That's the debt, 33 trillions and 600 billions US dollars. That's what they have to pay. Okay. So that means this is from 2023. It's in Portuguese, but it's trillions. I think everyone can relate that. I can translate that. That's not a problem. There you go. So 27.72 trillion US dollars. And that's from 2023. So if we look for the debt, as I say, 36.2 trillion. Okay. So, or math wasn't wrong, a little bit only, but about 3 trillion is wrong. So it's around 1.2 to 1.5% the GDP. Now, tell me, how will that country pay that? They can refinance this, right? Perfect. Where they can refinance this? On the central bank. Perfect. What is the rate that the central bank is giving for them? Well, just look at here. It's 4.58%. But there are risks that this could rise pretty quickly and pretty fast. So that shows to me that there is a problem, and a big problem. Because if that keeps rising, then we have an even more expensive loan that will mount to the debt. Okay, so it's a snowball effect pretty much. I don't know if you guys here have credit cards, but I'm just saying, let's try to bring this to an everyday sort of aspect. If you have a credit card, at least in Australia, for those who live here, most likely we relate with that. If you have a, I don't know, any bank, whatever bank, JP Morgan, okay? So you have a credit line with JP Morgan. You must be very rich to do that. But anyways, if you have a credit line with JP Morgan, at the end of the month, they will look at you like, oh, look, mate, you've spent 5K. Now you have to pay us back. Otherwise, the next month, we will incur a fee of, 14% on top of the 45K. Okay. So at the next month, and then you don't pay. Okay. So you won't be able to pay that. You won't be able to pay the 5K. So in the next month, you have a 14% added into the 4K, into the 5K. 14% of 5 is 700, if I'm not wrong. Yeah, 700. So $700. So now you have to pay $5,700. Okay, and that's exactly what will continue to happen with USA. If they can't pay the deal, if they can't pay the mortgage or whatever, the loan, then it will mount the debt again, and that debt will only increase. There's a few options for them to clear out. They can either print money, and that's a very, very messy way to do it, or they can most likely try to go and partner up with other countries and make more money. And that's the hard way. The easiest way, mate, can you print 1 trillion for us just so we can sort of alleviate here? Yeah, sure, cool. With that, inflation. With inflation, rates. With rates, boom. Okay, so it's just the whole economy, the whole economic system right now. It's a fraud, pretty much, into my opinion. And because they don't have where to run. They're never gonna pay $35 trillion. It's not million, it's trillion. They never will pay that. Never. Like, if you think they will, please put your hands up. Please put your hands up. I would love to understand your explanation. Yeah, no one. Like, come on. It's impossible for them. Okay, so again, back to gold. Gold is the one. Gold is still good a trade to trade. It's still a good long to be into gold. Definitely. Okay, things will get worse. that's what I have to say for everyone. And Trump's not helping. I'm not saying that I'm not supporting him, or I'm not saying that I'm supporting him. I'm not saying anything. I'm just saying that the way he's doing is not enough, and it's going to be problematic very soon. Okay. We've seen US stock decline, what it was like a sell US day, in which pretty much all the major indices, they posted a lot of losses, and treasuries were sold across the whole market. But the focus was pretty much largely been on Trump's tax bill, with an agreement made on the what's the name, the SALT deduction. Okay. So yeah, lots of things, lots and lots of things are happening. Anyways, so hopefully I could explain that for everyone. So why US dollar is weakening so much? First of all, because of risk. People know that US won't be able to refinance their debt, and the US 10-year yields, or even the US 2-year yields, I can put it here as well, forgot that. Both of them are rising pretty quick, okay, pretty quick. The 2 years is already trading at 4%. The 10 years is trading at 4.58%, all right? So even if we add, the 30 years will be a little bit higher, if I'm not wrong, from my economic classes. Yeah, so it's already at 5%. All right, so that's, sorry to say that, but that's pretty shit. It's going to be a big problem. All right. Yeah, I reckon what could happen from onwards is a continuation down from US dollar, and all the safe havens will be having inflows like Japanese yen, euro. Euro is the safe. It's not a safe haven, but because of the positive trade balance that they have, the investors are looking at euro as like, oh, okay, it's a good option to park the money there for a while until that sorted out. So Japanese yen, euro, gold, love gold, any other things, okay? So CHF as well, Swiss franc, lots of things. So it has to be very precise and very reliable, but I reckon DXY can continue to fall substantially. Okay, cool. So safe haven currencies back in play, Japanese yen, CHF. How can we take advantage of that? Well, as I say, the Japanese yen has been gaining some strength in the last couple of days. So if we look to USD Japanese yen, here we can see that it has been pretty quick going down. There you go. And my target has been 138. And it has been there for quite a while. I've been mentioning that for everyone already, okay? Yeah. Aditya say I'm literally frustrated by risk on, risk off. Yeah, man. It has been quite a pissing off, I would say. But if if you look to hedge into gold, it's always a good option. If you look to whenever it's risk on, just buy gold. Sorry, just sell gold. Whenever it's risk off, buy gold. Japanese yen is a good one as well, and etc. So yeah, it has been quite a unfortunately moment, but we're gonna get there. So US dollar, Japanese yen, as I say, well, the safe haven currencies are back in play, and that shows to me that we may have something happening. Okay, we may have some sort of moves happening. I was looking at the commitments of trader. Long time actually, I don't show that for you guys, but I was looking at the COT, and it doesn't look any good for gold. Sorry, for US dollar. Okay, let me just bring that here so you guys can have a look at it. Okay, So if we look at gold, US dollar. Okay. So that's the US dollar right here. And we can see a few things, all right? They have much more shorts than long for quite a while. Okay. So they had longs, but now they're much more short than longs. Okay. So yeah, the net percentage is still positive, of course, but what I like to look at is the short. Okay, so 20 shorts, 12 longs, so totaling 32 trades, um, and the net trade is -8. So for me, if those guys are selling, then I don't have a, I don't need to say anything else, because yeah, that's all I want to show. Just be careful because big banks are selling US dollar. And if they're looking to sell US dollar, and then we have like Japanese yen being held long, like 12 plus trades long. So, 30 longs, 33 longs, 29 longs versus 18, 21, 18. Look at what else? Yeah. I mean, but the safe haven currencies are back in play, and most likely what we will have is US dollar Japanese yen collapsing. Okay, we're most likely going to have very quick moves, very fast moves going down. As I said yesterday, I had a short position somewhere on here, yeah, here, and then I went all the way down, and then put my stop losses into break even, and then the market came back and stopped me when I was sleeping. Um, oh yeah, here. Yeah, that was somewhere around here. Anyways, so the market stopped out and on break even. So I didn't lose anything, but I didn't make anything, but I was right on the side of the market. But still, I'm really looking to get to the 138 level, especially at the 140 level pretty soon. Okay. So just keep an eye on that because it's definitely a good option to be trading shorts on USD Japanese yen. Other one is the US dollar CHF. Looking to trade shorts on here is a good option as well. But just be careful because we are into the lowest point it always have been. So in terms of technology, we may have some sort of support here. And if we have that support, the market can bounce up again. Not saying that we'll do, but I'm just saying that could potentially happen. Okay. So, but yeah, CHF is a safe haven, and for that, and therefore, looking at shorting US dollar CHF would be a good trade. If we have the inflow, if we have real money looking to trade it, because at the moment, what I've been looking at, I had some couple trades open up. I had to close that, but what I've been looking at is a lot of noise into the market, but not actual, not directional way. Okay. And for that reason, I'm just stepping back a little bit and reassessing what's happening and trying to look at where are the best options to be traded and not looking to trade everything at once. Okay. So in my opinion, yes, there are options, but as I say, risk off, just looking to long gold. And that's my trade at the moment. Okay. Cool. Yeah, so you still have like Aussie Japanese yen as well, as I say. Aussie is a risk off currency and Japanese yen is a risk, sorry. Aussie is a risk on currency and Japanese yen is a risk off currency. So therefore, it's always a good option. I had a short position all the way up here at 95. And I've mentioned already that on the Telegram, a couple weeks actually ago, if you guys don't remember, I can definitely show to everyone. Let me just bring that up here. Wow, that was quite a while ago, but I found it. Yeah, so if you guys look at here, Citi FX outlook, Aussie Japanese yen and euro dollar. Aussie Japanese yen. Citi believes we may have seen peak panic around tariffs, which could offer short-term relief in markets. However, they remain cautious and look to fade bear market rallies, highlighting Aussie Japanese yen downside as attractive, especially on a squeeze toward fall. In orders, they see any rally as potential short setups, and as they say, anything at Aussie Japanese yen downside could look attractive on a 30 squeeze to 94. So we got into the 94 level, and I was just waiting for that and a shorted. So I've sent that information on April 17, so pretty much a month ago. And then same goes for euro dollar. That pair is showing signs of a potential bullish break, but Citi is not fully convinced. While they won't fight the flows, they remain skeptical for sustainable move. They see risk is increasing towards 120, particularly if capital shifts more meaningful away from US assets. Okay, so euro dollar is showing signs of potential major bullish break. Why we still do not believe anyways, so they continue to say that euro dollar was going to be a good long trade, and indeed it's becoming a good trade. 17. Yeah, so 17, they had a bullish break and then pull it back and then now continue to go higher. Okay, someone sent a message. Hi, Luca, do you think the risk off, risk on is going to continue the whole year, or things going to go back to normal as time goes? But already we are half through the year. The year next month is June, and Trump is making things worse for us as traders. It has been nice so far. Yeah, it's a good question. I believe we will continue to be risk on and risk off, risk on and risk off. And that's why I think gold is still a good potential to just be longing it. Okay. In my opinion, I think that answers pretty much the whole question. Okay, cool. So coming back, let me just bring that here, this one here. So coming back to here, yeah. Can we trade? How can we take advantage of that? Well, long in Japanese yen, looking to long euros, looking to long gold, looking to go long CHF, and shorting like Australian dollar, shorting like Canadian dollar, etc. Trade tensions back after G7 meeting in Alberta. Okay. So this one is I just want to go run through. There's nothing too big to talk about. But I reckon, there was a few things that we had to talk about in a sense. For those who don't know, let me just get my thing here. G7 is the group of seven. Okay, sorry. G7 is the group of seven. Where the G stands for group, and then we have like G8, basically the group of eight. And then we have G7 as just like group of seven. And then we have G20, it's the group of 20. And the 8 members of the G8 are in order, they're rotating hosting responsibilities. Anyway, so there's all the countries into the G7. So there were a few key discussions and outcomes. So basically the trade tensions and the tariffs, basically they had a lot of talks about downplaying disputes arising from US. Of course, Trump, is in the moment, it's a very expensive tariff, including a 25% on Canadian exports and 10% on Europe goods. So they tried to reduce that. They didn't came to any viability, so we don't know what could potentially happen, so a lot of uncertainty back again. The sanctions on Russian oil, so delegates considered lowering the $60 per barrel price cap on Russian crude oils as a part of the further Europe sanctions. Okay, so Europe is pushing for this reduction to target Russia energy revenues and financing of sanctions circumventions. Another thing that is quite important for us is the currency and trading balances. The currency issues, like the U.S. Treasury Secretary Scott Bessent and the Japanese Finance Minister Kato, they agree that the current dollar-yen exchange rate reflects fundamentals. However, they did not discuss the specific currency levels. So despite these discussions, it remained very unclear whether the leaders they want to agree on a joint communique, with some officials emphasizing the importance of reaching a consensus. So I reckon the upcoming G7 leaders summit in I think it's going to be on Kanakis, something like that. This will address a little bit those issues, and will aim to solidify the agreement on those countries. So, in my opinion, they've talked a lot, but nothing came up. So, what is moving the market is the yields. Okay, so the yields are higher, the risk is off, and they're looking how the US will refinance the debt into the next coming days. Guys, thank you so much. I hope everyone could have had a good time with me. For those that for some reason had to jump off and then back to jump in, the video of the replay will be updated tomorrow, so you guys can have a look into the YouTube channel as well. Thank you so much. Have a great weekend ahead. I chat to you next Tuesday, 4 to 5 p.m. in Sydney time. And also we'll be back into the YouTube tomorrow as well, and market updates as always. Thank you everyone. Cheers and bye for now.